We have MAG Silver Corp is an exploration development company advancing its principal asset, the 44% of ownership on a CPO property with Fresnillo, the world's largest silver producer and Mexico's largest gold producer. MAG has $120 million cash and no debt, and 90% institutional shareholder ownership. One of their mottos is, "We have a history of turning forward-looking statements into facts." Their Chief Exploration Officer here today is Dr. Peter Megaw, and their booth is 202 if you haven't had a chance to go over there yet. First Majestic Silver bills itself as a one-metal, one-country company. It has 6 producing mines in Mexico, 2 of which are silver-gold producers, with 3 additional advanced stage projects in the pipeline. President and CEO Keith Nuemeyer's goal is for First Majestic to become the world's largest primary silver producer. And I listened to his talk yesterday, and hopefully many of you did as well. And if I understood him correctly, he's replacing for every ounce produced of silver, 3 ounces of silver, which is quite a feat. New Pacific Metals' flagship project is the Silver Stand project in Bolivia. Its largest shareholders are Silvercorp Metals, the largest primary silver producer in China, and Pan American Silver, itself an operator of 6 mines, one of which is also located in Bolivia. New Pacific's CEO is Ray, and their president is Gordon Neal, and he's here with us today. Their booth is booth 500. So let's start with Gordon. Could you just give us a kind of an update of where your company is today, what's happening recently?
Thank you, David. Where we are right now is we're at the end of a 2-year drill program where we're finishing 55,000 meters of drilling. We will have a resource out by the end of the first quarter of next year, and things are looking good for us in terms of not only share price, but what's going on in Bolivia right now is I need to speak to that quickly. The elections have been kind of raucous. We've seen a lot of rioting in South America, but our projects, because they're private and they're tied to the law, is difficult for them to deal with in terms of taking them from us or having any problems. So we're looking good. We like what we see so far. We need to get that resource out to find out whether this is as big as we think it is. I have to thank Peter as well for coming on and helping us with the advice on what the model looks like, but that's where we stand right now.
And Keith, could we hear from you about First Majestic?
Sure. Well, thank you, and thanks everyone for coming today to the panel. There's lots going on at First Majestic, so it's kind of hard to answer that question without going on for 20 or 30 minutes. We've got 5,000 employees. We just pulled off a bang-up third quarter. November 7th is when the financial statements come out. We had substantial cash generation in the form of profits in Q3. As you've seen from some of the gold miners announcing, very, very good Q3s. We're in that same boat, and I look for those numbers. We're very, very excited about what happened in Q3 with the increase in metal price. That $3 increase in metal price to us is about $110 to $120 million extra free cash flow that drops to our bottom line. So it's pretty exciting for us with the treasury going up and production going up and efficiencies coming into the system or the business. We had a record recovery rate of metals in the 17-year history of the company in Q3 of 88%, and we're still pushing hard on other innovation, other technologies, with the goal of getting our recoveries up to 95% by the end of 2020.
And Peter, would you tell us about MAG Silver?
I'd be happy to, David. Good morning, everybody. Great to be back at this version of the Silver Summit. I've been coming for many years. MAG is building, with our partners Fresnillo PLC, what should be the world's largest producer of silver by mid-2022. That would be 22 million ounces of production a year. We're the 44% joint venture partner. We have a market cap of around $1 billion, 8 employees, so that's about $100 and some odd million market cap per employee. Fresnillo is the operator. They're doing the work. They're building essentially version 3 of a mine that they have built twice in the last 12 years within sight of where we are. So they're doing a bang-up job building it well below estimated costs. They tell us we will have the plant up and running in 12 to 14 months. And then it's just a question of ramping up into production, which, according to our PEA, will last for a minimum of 19 years, assuming we don't find any more. And my job is to keep everybody looking for more, and we've explored less than 5% of our property package with plenty of reasons to think there's more.
Very good. Thank you very much, Peter. You know, I think maybe the people in this audience don't realize just how special these three companies are. We've gone through the deepest metals share price decline in 50 years, going from 2011 and with a little respite in 2016. And the fact is that they're here, they're strong financially, and a lot of companies, even though they're still around, are really hobbled. And so these companies have done some special things that we'll find out more about today that enable them to actually be up here today and be real contenders going forward in what the Morgan Report believes, and many of the speakers here believe we're going to see some of the highest real dollar terms prices in gold, silver, and other metals in our lifetime going forward over just the next few years. That's the real possibility that we're looking at here. So what I'd like to ask, starting with Peter, would be as we go forward, there's a tendency for mining companies to kind of forget the bottom line in terms of how much they spend to get where they're headed. And I'm wondering what plans that you might have over the next few years to stay lean and mean going forward with the project that you have evolving.
Well, the easiest or the most direct way for us to do that is to keep working hand in glove with our partners, Fresnillo PLC, and let them do the heavy lifting. That lets us keep the number of people we have to a minimum. The CapEx for the entire project on 100% basis is only $400 million. So our share of that's about 170. We've spent about 40. We've got 115 million in the bank. We've only ever issued 86 million shares. So we're very tight and been very disciplined in maintaining our position in the market, and we plan on doing that going forward. There's a couple of other things we're looking at on the same kind of philosophical basis that we got into Juanicipio in the first place, which is we look for high grade, which means something that makes money under the worst market conditions imaginable, big enough to survive at least 2 market cycles so that you can take the benefit of the good years when they're happening and sleep during the bad years, and do this at a low entry cost to own 100%. So that's the foundation of what we do, and we hope to lather, rinse, and repeat and continue to make those forward-looking statements into history.
And does Fresnillo give you pretty good leeway in terms of how you drill and where you drill within the context?
Well, Fresnillo is the operator of the project, and they actually manage the exploration, but it's done, everything is done through a series of technical committees and an exploration group. We have a lot of input with the exploration group, and so a lot of, essentially what happens is every year we sit down with our desired holes, and our lists usually match pretty closely. So it works nicely.
Very good. Thank you, Peter. Keith, you know, one of the things that I've observed about you over the years is your persistence. And I think you said yesterday it took you 3 different times to get one of the best mines you have in the portfolio. And can you tell us how that is a big role that's played in where you are today?
Well, you know, I'm not a geologist or an engineer, so I built this company through acquisitions, and I think that, you know, virtually every mine that we bought in the 17-year history of the company has at one point become our largest mine. You know, it's just a tough thing to accomplish. Now that we've bought San Dimas, which is a 14 million ounce producer, you know, I could just, you know, it's going to be kind of hard to match that in our next acquisition, but it's something that we spend a lot of time, you know, thinking about. But, you know, to the cost, you know, because that was a great question, because, you know, I hear, you know, fund managers and alike, you know, they point fingers at the mining sector for making some poor decisions. But there's 2 things that drive costs, and one is inflation, and that's energy costs and you know, equipment manufacturers increasing prices on us, and, you know, labor costs going up, and, you know, things like that. Some unavoidable, but we've done things in our business which we're doing at San Dimas is through technology. You know, our recoveries have gone up from a global recovery has gone up from 65% back in Q1 of 2014, which, you know, in the silver sector, you know, you look at the sector, it's not that unusual. You know, you see 65 to 75% recoveries, which, is almost an acceptable number. But we started attacking that number, and, as I said in my previous statement, that we hit 88% recovery just this last quarter. And that's huge, because for every 1% additional recovery that we can get, it drives 150,000 ounces of free silver to our bottom line, basically. So over that 5-year period, our costs have dropped by 50% through technology. So when we get the next cycle, which I think we're in the beginning of it, we're hoping to see less inflation creep as a result of efficiencies that we brought into the system. And of course, Peter touched on the other driver of costs, which is grade. In a low margin environment, the entire mining sector globally has been suffering from lower grades because there's been less capital to invest in exploration and development. So you're forced as a miner to go after areas of ore that's closer to the mill, and often because you don't want to spend the money on developing large access ramps or exploration programs and so on. So and we had a 5 or 6 year bear market. So, for us as a company, our grades started to drop at some of our operations. But now that the margins have started coming back in to the business, we can start redeveloping and redeploying investment dollars into some of the more challenged assets. And over time, grades will start to go up, and of course, costs will come down again.
Thank you, Keith. Gordon, how under your stewardship is New Pacific Metals shepherding their money to the benefit of shareholders and the advancement of the project?
Yes, thank you very much. The grade aspect that both these guys have brought up is important. Good grade over good width is what we have right now. It's a bit early for us, but so since we're in the drilling phase and we're in the exploration phase, the best thing that we can do is to drive down our drilling costs. And we've done that by having two companies in Bolivia who bid for our drill contracts, and we've driven it down to $213 a meter. And in this environment, at $230 a meter, we're probably one of the lowest cost drill projects in the world, I would say. So, because we're early stage, yes, it's a new discovery. Yes, we're excited about it, but our costs are mainly driven right now around the drill costs are the highest expenses we have. So we've got them driven down. We also look at other costs as well, travel and all those things. We have a system that actually came out of Silver Corp, where we have to have 3 bids on everything that we actually we buy. So we are very good at looking at our costs and our structures in terms of processes and spending.
Thank you. Peter, in your presentation yesterday, you said something I found to be fascinating. If I understood it correctly, you said that you're finding average 2 grams of gold up and down the deposit, vertically and horizontally, kind of an average. And, there are companies out there that are trying to make money and making some money on a 0.5 gram per ton gold company. So this is kind of a bonus in addition, finding this in the silver project. Is this unusual? And also, how did you come to determine this?
Well, first of all, the Fresnillo district where we're operating is unusual. It is the world's largest epithermal vein system. It has gone from 250 million ounces of historic production to better than 3.3 billion ounces. This is of silver. Since 1976, between resources and production. It is unusual to see as much gold as we're seeing in the Valdecañas vein. It is worth pointing out that the people who are mining 0.5 gram gold are doing that in open pits, and ours is going to be an underground mine where the 2 grams gold is simply a sweetener. That's on top of 550 grams of silver. So silver is really what drives about 70% of the economics. Because of the fact we also have 5% lead and zinc, we wind up with a $5.02 all-in sustaining cost per ounce of silver equivalent for life of mine. That's a minimum of 19 years. If you look at it on a byproduct net basis, netting off the cost of the value of the gold and the base metals, will produce silver at a negative number. So yes, it's an extraordinary system. The gold is just one aspect of what makes the Valdecañas vein so extraordinary. The lateral continuity, the depth continuity, and the the overall grade and the width make for very low cost, very high profitability mining. We wind up with under the UPEA, we wind up with a 44% after-tax internal rate of return.
Very good. Thank you, Peter. Gordon, it's my understanding that when Geo from Pan American Silver toured your project the first time, while he was there, he cut you a $22 million check. Is that about right? And what do you think was the reason that he opened his checkbook so quickly?
Actually, the Geo that was on the property, he was only on there for 2 days, but I just found out last week, because Ross Beatty was on the property, that they owned the property in the late 90s. So I'm not certain whether the Geo on there was aware of that, but if you saw the presentation and you see the mineralization at surface, I can't speak for the Geo personally, but it's quite a system to see at surface and see all that mineralization. And I think that they, again, I brought Peter on because we worked at MAG together. And when we were driving down through one of the canyons, he looked at me and said, "You need more land. This place is mineralized in every direction." So I think that probably that geologist saw that as well. The fact that they may have owned it before. I think also the fact that Pan American has a lot of underground operations. They're costly. With the vagaries of commodity prices going forward, it's better to, if you can add an open pit to your portfolio, you're going to mitigate against some costs in the future. And I think that that's what they were thinking. And with this stuff at surface, I think that's probably why he wrote a check.
Very good. Thank you very much, Gordon. Keith, you've gone on record on several occasions at least, and you can see some of these interviews on kitco.com of saying that you believe that $100 silver per ounce is in our future. Can you give us a sense of how you kind of conclude that, or what do you think would be the motivating factors that would bring that into a reality?
Well, like I'm a big believer in supply demand, and I know that markets go through periods of imperfection, and me coming from the banking side and the trading side of the industry, of the financial community, I think I come with a little bit of a different vision than most. But I put together a copper company back in 1992, and turned out to be quite successful. And I did it for the same reasons as I put together this company, First Majestic, in 2002. And it was based on my supply-demand fundamentals, beliefs of the metal price. And for me, if anyone in this room would like to explain to me why we're trading at 85 to 1 and we're mining 8 to 1, I'd love to hear your reasons for it. But in my view, that relationship will crack, and we will see triple-digit silver based on supply-demand fundamentals alone.
Thank you very much, Keith. In the remaining couple minutes we have here, I'd like to just have each person to give us a data point about their company that maybe they haven't mentioned, or that they feel that you want to really make sure that you're aware of. So could we start with Peter on this then?
Well, the one point to emphasize, if I didn't mention it already, is we expect to be in production starting in 12 to 14 months, and within a year or so after that, we will be 44% owners of the world's largest producing silver mine.
Quite a data point. Keith?
Well, geez, there's so many things. Well, from an investor's standpoint, because all of you are investors, I think it's probably easiest just to look at the stock and what it does in a bull market. Our shares trade approximately 60 to 70 million US dollars per day. Our entire float is turned over every 27 days. It's the most liquid mining stock on the planet, as far as I know. It's really become, over the last decade or longer, the really go-to silver stock in the world. It's outperformed every single silver stock on the planet. MAG's not a producer. Maybe MAG will take our #1 spot when they're producing, but we'll see. That's a bit of a challenge for Peter, but we'll see. We have a very large retail following. 88,000 shareholders worldwide. We're 45%, 50% institutionally held. We have over $100 million in the bank, free cash flowing at something in the order of $120 million US dollars a year, current metal prices. And if silver goes north of $20 over the next year or so, which I think it's going to do, First Majestic, I'm sure, will continue to have its #1 position in the space.
Thank you, Keith. And Gordon, how about yourself?
It's exciting for us in all kinds of ways. New discovery, primary silver. It looks like it's going to have scale. Hopefully it's economic, but that remains to be seen. So the other part of it is, too, I know Bolivia is in a bit of turmoil right now, but it's also exciting for us. I have Carolina working with me in Bolivia. This country's opening up. So from somebody who's worked in government before, to see a country that actually is bringing in foreign investment, they're behind it. There's a bunch of big companies behind us waiting to get in to the country. It's exciting on all kinds of fronts. I get up in the morning like loving my job and wanting to do it, even though we have to travel like maniacs, and we all do. The other data points I would just say are we have catalysts in terms of we have drill results that will be coming out at the end of the year, and we have lots of drill data coming out. A resource will be coming out the end of Q1, PEA about probably 60 days after that. So that'll tell everybody, and it'll tell us what we have. Metallurgy looks great, so far between 88 and 97% recoveries. We're going to have to continue to do that. But for me, it's an exciting opportunity for one guy to have been involved with MAG Silver and this project. Obviously, I got silver running through my veins somewhere, so thank you.
That was really great. You know, it's been a privilege to moderate this panel. I don't know if we have any time for a question. Are we there, or we got a minute or so?
Keith mentioned, the natural rate of 8-to-1 for how much silver is mined as opposed to gold. And I'm wondering, for each of the panelists, what the desired or what the expected gold-silver ratio would be and why.
The natural rate in the Earth's crust is 16-to-1. That's the accepted. And Peter's a geologist. He's more qualified to answer that than I would be. But that's the kind of the accepted number that I'm aware of. When I put this company together, the trading ratio, the mining ratio, was around 12 or 13-to-1. Today it's 8-to-1. So we're challenged finding good silver projects out there, and silver projects are much rarer than people give it credit for. It's a lot. You look at this space, and you look at one of our slides in our presentation. There's about 12 or so companies on that slide that call themselves silver companies, but in fact only 2 of them are over 50% of their revenues from the sale of silver. But you go back 15 years, and most of those companies were actually legitimate silver companies. And the reason, but in order for them to grow, they've had to buy gold mines. They couldn't find good silver mines. So that tells me something.
And keep in mind, these are primary silver producers or exploration plays, and that's a big difference. Only about, 35-40% of all the silver produced comes from these guys. Most of the rest of it is base metal production. So
it's actually less than that. It's more like about 25% or 30 maybe max that comes from primary silver production. So in many ways, the numbers Keith's talking about are even more in favor of the primary silver industry, because if the price of silver, or when the price of silver moves, you can't ratchet up the production from the world's largest gold and copper mines and lead zinc mines to pick up more silver. The only place you have to pick up the slack on the supply side is primary silver mines. Excellent.
Thank you on that, Peter. And if you're a silver bull, these are the stories that are going to be supercharged as we move into this bull phase. Thank you very much.